Welcome back. So with interest rates near zero, that means it's hard to make money. And MF Global's missing $1.2 billion in customer money shows that maybe, hey, your money isn't safe in a trading account either. It could be lost to bankruptcy or to theft. So where is it safe? That's a big question, right? So is it Asia? Is it gold? And what's happening to the euro? Well, earlier I asked Jim Rogers all of that. He, again, of course, is famed investor and author, and he lives in Asia. So I asked him, with the vice premier of China this week saying that essentially he predicts the global economy will slump into long-term recession, and also warning that China will need to deepen financial reforms in order to cope with the fallout, I asked Jim Rogers if he's still confident China is where the money is, as he said so many times before.
China is the largest creditor nation in the world. They have over 3 trillion with a T dollars in reserves, far, far, far above even who's number 2. So yes, that's where the energy is. That's where the future is. But Ms. Lister, if the world goes into more economic slowdown, which I expect, if Europe and America go into slowdown, everybody's going to be affected. The Chinese will not be able to escape that. Nobody will be able to escape that when you have the 2 largest economies in the world having trouble. Everybody's going to have trouble. Now, I have some money in Chinese banks. Am I taking it out? No, not at all.
And I want to bring our producer, Dimitri Kofinas, in to the conversation because he wants to ask you a question, I believe, on the Chinese banking system.
Hey, Mr. Rogers, how you doing? My question has to do with exactly that, with the possibility of China going into depression, because you've compared the boom that we've seen in China over the past 20, 30 years to sort of what happened in the United States after the Civil War and the industrial boom there. However, at that time, the banking system in the United States had not yet been as fully consolidated as it is today, and it certainly wasn't anything like China. And the kind of loan growth that we've seen in China has been tremendous. So that has the potential for a lot of misallocation in terms of resources and goods and services. And so are you concerned at all in terms of what kind of bad loans could potentially be hiding inside the Chinese banking system, and how that could be affected if we were to see a slowdown in China?
Well, I'm sure there are going to be plenty of bad loans coming out of the Chinese banks. After all, the Chinese authorities are doing their best to slow things down. They're doing their best to drive real estate prices down. They've raised interest rates 6 times. They've raised reserve requirements 12 times. I mean, I wish the U.S. was doing what China's doing and trying to kill inflation. So sure, you're going to have some people going bankrupt. You're going to have plenty of real estate speculators in China going bankrupt. Is it the end of the Chinese story? No. I mean, look, you watch the American banks. You're going to see some unbelievable bankruptcies coming out of the U.S. in the next few years. But the Chinese banking system, by the way, is not nearly as all-pervasive as in the U.S. There are lots of Chinese who still don't have bank accounts. This is a new, I won't say a new industry, but it's certainly not a mature industry yet in China. But to your question, yes, there are going to be plenty of bankruptcies in China, just as there are going to be in America, in Europe, and the rest of the world. You should be very careful. We've got some difficult times ahead of us.
And you know, Jim, one of the things that people think would set off bankruptcies in U.S. banks is exposure to European sovereign debt through credit default swaps. U.S. banks have written a lot of that. You, as far as the euro is concerned, I believe as of like the recent things that I've read, you own it still. But long term, you think it's a disaster. And you were saying that back in 2004, you were very bearish on the euro looking long term. I saw that in an interview where you were alongside Mark Faber talking about that. Now, of course, a lot of people are bearish on the euro long term, saying it may not even survive. What did you foresee back then that other people didn't, including your friend Mark Faber?
Well, I own some euros still, but I have cut back since you and I spoke last. I actually own more U.S. dollars, even though I'm wildly bearish on the U.S. dollar long term as well. What I saw, Ms. Lister, back then and still see is that the euro, unfortunately, has become a political currency rather than an economic currency, and politicians are trying to make their names and reputations by taking pot shots at the euro or threatening to pull out of the euro. Unfortunately, the euro, when they started, they should have put together a few sound countries and then let other people in at a very slow and methodical basis, only the people who knew they had to run sound economies. But the bureaucrats in Brussels, like bureaucrats everywhere, got power hungry and started saying, let's bring in everybody in town. Let's all come here and have a party. And they let them use phony books. Everybody knew that the people were using phony bookkeeping. So now the euro, unfortunately, is going to disintegrate sometime in the next decade or so. it's a shame because the world needs something to compete with the U.S. dollar. On paper, the euro is perfect. It's not a big debtor entity like the U.S. as a whole. I mean, they've got Greece, which is bankrupt, but as a whole, the euro's got a balance of trade. Doesn't have a big balance of trade deficit. It's not a gigantic debtor nation, a debtor entity. It'd be wonderful. Unfortunately, it's going to fall apart. Not this year, I hope. I still own some euros, but maybe certainly in the next decade.
Okay, and speaking of the next decade, what do you think could challenge the dollar? Could it be gold? Could it be the renminbi?
Well, it couldn't be the renminbi anytime soon because the renminbi is still a blocked currency. It's, you cannot have world trade conducted with a blocked currency. I mean, the Chinese are opening it up more every quarter. They do something. Every month they do something to make it more and more international, if you will. The only thing on the horizon, if America fell into the sea today, I guess people would have to use the euro because there's nothing else. But I just said the euro is going to fall apart too in the next decade. I guess if America fell into the sea right now, they'd try the euro. They'd probably try gold out of desperation. Gold is not going to work either, and it never has in the long term anyway. So we're going to be in a bind. 10 years from now, it might be the renminbi. I don't see anything else on the horizon longer term other than the renminbi, or maybe gold in desperation if we have a sudden panic.
And just very quickly, I know that in the next 10 years, too, you said that you believe that gold will hit $2,000 an ounce. We've seen recently it get pretty darn close. Are you prepared to revise that number up? And do you think gold is due for a correction coming up?
Well, Ms. Lister, gold has gone up 11 years in a row, which is extremely unusual for any asset to go up 11 years in a row. So gold is overdue for a correct. I own gold. I'm not selling any gold. If it goes down a lot, I hope I'm smart enough and brave enough to buy more. I certainly still expect gold to go to 2,000 and probably higher over the next decade. But it needs a very nice correction right now. And speaking of MF Global, that's causing a lot of selling in the commodities markets at the moment, forced selling, artificial liquidation. So who knows what might happen. In the 1970s, gold went up 600%. Then gold turned around and went down 50% for a variety of reasons, scared everybody to death. Many people jumped out, said it was a fluke. Then it turned around and went up 850%. So these kind of corrections and consolidations in all markets are normal. It's not unusual.
And he said longer term, he did not want to go ahead and revise that number, that $2,000 an ounce number for gold upwards. So we left it at that. That was Jim Rogers, investor and author.